My name is Lucille Hu. I am the GM of FBG Capital's San Francisco office. In case you're not familiar with FBG, we are a digital assets focused hedge fund. We have a trading arm as well as an investments arm with about 70 portfolio companies at the moment. If you guys have questions or any kind of interesting projects you want to talk about, I'm happy to have a chat at some point in the conference. So we have a very exciting panel right now. We have 4 projects that are here to talk about the issues they're working on and answer some of my questions, which are hopefully, questions that you find interesting as well. So the first project we have is Mithril, which Gary will be explaining to us today.
Yeah. Hey, so, so I guess I'm using. My name is Gary, and I'm working on Mithril, which is a new privacy-focused cryptocurrency. So why should we care at all about crypto privacy? Well, as Adam Back says, the inventor of Hashcash, the users want more privacy once they realize just how weak Bitcoin privacy is. It's kind of like putting your credit card statement and bank statement online. It's something that nobody wants. So in the past 9 years of privacy protocol development, there's been this kind of fundamental trade-off between privacy, scalability, and auditability. What do I mean by auditability? In this context, what I'm referring to is the ability to check that the total money supply of cryptocurrency is actually what it's supposed to be, and that there hasn't been this undetectable counterfeiting of coins through some possible exploits. And so with Bitcoin auditability, it's very simple. You just take the sum of all unspent transaction outputs and you sum them all together and make sure that it's what it's supposed to be. But with privacy cryptocurrencies, this turns out to be much harder and sometimes impossible. In the case of private cryptocurrencies, all it takes is a single exploit, and you could have potentially undetectable and infinite counterfeiting of the money supply. So one of the main reasons why we started the Mithril project is to specifically solve this auditability problem. So Mithril is an implementation of this beautiful protocol called Mimblewimble. And this allows Mithril to uniquely offer not only strong privacy, but also strong auditability and scalability. And this has been something that's actually never been possible before with cryptocurrency privacy protocol development. And so we're very excited to bring auditability into privacy coins. And also, Mithril will be compatible with Ethereum, and in the future, hopefully other Turing-complete smart contract systems. So there's also been this very big difficulty with having privacy work in practice. For example, with Zero Cash, less than 1% of the transactions are actually private because of certain scalability issues that Zero Cash has. And with Mithril, we're really trying to change that. We want to build a truly private payment system. So with Mithril, all the transactions are private by default. And all the transactions are encoded with, are use homomorphic encryption so that the transaction amount, sender, and receiver are all hidden. The only transaction data on the blockchain are uniformly distributed random points on an elliptic curve. And this doesn't give any useful metadata that can be used to break privacy. Also, Mithril is very scalable in contrast to many other privacy protocols. So there's a very low disk space requirement. And in fact, the amortized cost per transaction is about the same as Bitcoin. And in fact, with pruning, you can make this even more data efficient than Bitcoin. It also has very fast verification because all that's required is this simple elliptic curve operation check. So yeah, let's go back to auditability. With privacy coins, this really is a problem that just nobody wants to talk about. And we think that this is a huge problem with privacy protocol development. So to further kind of emphasize this point, let's look at a few case studies. In 2010, there's this buffer overflow bug with Bitcoin, and this created 180 billion extra Bitcoins, right? And luckily, the developers patched this and it was fixed before it could do further damage. But just imagine, what this result would have been if it happened in a private cryptocurrency. Well, the most likely scenario is that nobody would have noticed, and this could lead to undetectable and infinite inflation of the money supply, and the investment would slowly dwindle towards the value of zero. With Bitcoin, there's a bug last year, which Bitcoin's a $1 billion cryptocurrency, and it had this bug that could lead to undetectable counterfeiting as well. And any of these private cryptocurrencies have this problem where a single exploit, in theory, could lead to this undetectable and infinite counterfeiting of money. And with Mithril, we're very proud to be working on something that solves this auditability problem in a very foolproof manner. It prevents this undetectable counterfeiting of money, and we can easily prove the integrity of the entire money supply with a simple elliptic curve operation. It's highly foolproof again, and it's kind of like a checksum to make sure that the money supply is what it's supposed to be. And importantly, the auditability doesn't sacrifice the privacy of the protocol at all. Some of the applications we're excited about with Mithril, one is we're working on creating a way to make private assets within the Mithril network. So similar to like the ERC20 token standard, we want to make a privacy standard within the Mithril network that will allow for exchange of private assets. Also, we're excited about, just in general, private payments for Ethereum dApps. And one exciting use case could be gambling, where there's certain regulatory risk, and with private payments, it just makes these kinds of decentralized dApps that much better. Cool, yeah, so that's all I have for the introduction. If you want to learn more, just feel free to email us at info@mithril.cash.
Thanks, Gary. So I'm sure a lot of you have heard a lot about privacy coins, including Monero, maybe Zcash, Dash, over the last few months. So it's an issue that is pretty relevant in blockchain currently. Mithril's interesting in that it's building a layer sort of over the Ethereum protocol. And I'd like to ask why your team chose to build this on top of Ethereum, because there's there are some maybe you can talk about that.
So I mean, the biggest reason is actually like the same reason that a lot of projects are launching tokens on the Ethereum platform. We get to kind of free ride on the network security of the Ethereum platform without having to pay miners. And so, if you look at something like Zero Cash, the inflation rate is so high, and what we're really doing is paying miners for something that we think we can. We think the economics is just that much better by having a system that doesn't have inflation in the money supply. And so that's one of the big reasons we're actually building on top of Ethereum. And also we want to enable a lot of these privacy payments within to other Ethereum smart contracts and within the Ethereum network. We think that privacy is one of the big things that is still missing in the Ethereum network, and we're very happy to work towards fulfilling that.
Okay, great, thank you. So the next project we'll be talking with is Hub.
Hi, everyone. My name is Eric Lee, and I'm going to talk about a new project today called Hub. So about 15 years ago, I co-founded a company called LinkedIn, and we learned a lot about social networking. 15 years later, we see a lot of, I think, issues around social systems on the internet, things having to do with data ownership, fake news, things like that. And it's kind of a time for a reboot. And so Hub is trying to do that. And one of our main missions is to really try to bring blockchain technology, make it relevant to the mainstream users, especially to people who may not even know they're operating on a blockchain. So we decided to focus on the whole idea of trust and reputation. Social networks and online communities, peer-to-peer marketplaces, messengers, they've done great in terms of connecting people all over the world and introducing what we call strangers to one another. People know about this Dunbar number, which says that at any given time you're most closely connected to about 150 people. The internet has definitely expanded that quite a lot, but what it maybe hasn't done is to help you understand the trustworthiness of those people that you're either interacting with or transacting with on a lot of these different platforms. And so that's the problem that we are aiming to solve. And so the hub is the human trust protocol, and what we're introducing is verifiable and portable trust, so that your trust data is not owned by the centralized platforms, but is in fact owned by you. That leads to this idea of self-sovereign reputation, which is an extension of self-sovereign identity. And we really believe that reputation data is largely contextual. It means that it just depends on the domain that people are operating in, what it means. And so we have a way to represent reputation in many different kinds of domains. And then finally, the idea behind the protocol is that many different kinds of applications and communities will actually be able to use this on behalf of their users to create more trust in their systems. So we really believe in the idea that you can record interactions and transactions on the blockchain. The idea is that you have these things called tasks, which kind of map to smart contracts. And then we have a concept that we have introduced called trust stake, which is the idea that when you're engaging in an interaction with somebody, you put something down that is at risk, that you might actually lose if things don't go well, but you also get rewarded if things do go well. And that maps pretty naturally to a token. And then the third thing is this idea around outcomes, which is how did that action or task go as adjudicated by other participants of the task. And that's what really leads to reputation in terms of how other people see how you've done on those tasks. So this is a very simple scenario of how that would work. Sorry for the very small font, but there are the two people on this slide that are engaged in a consulting project, Katie and Sam. And the way that it works is that both Katie and Sam, the client and the supplier, put some stake down on a website project, let's say, and if things go well, they get their stakes back, and that successful project goes on to a reputation history. If they don't go well, basically Sam, who's the website designer, loses his stake, and Katie gets compensated for lost time and opportunity. And that also goes on to the reputation history. There are many things that reputation can represent. So part of the idea behind the project is that we want to welcome developers to develop new tasks that generate reputation data. The token that we have is used for pledging stake on tasks. You can't buy your reputation, you cannot buy trust, but you can buy the opportunity to earn reputation. Node operation, you can use it to pay developers for tasks that help you generate reputation, and then you can also just use it as a form of payment. So we really want to bring this idea to ground, so we're developing a couple of test applications or reference implementations. One of the first ones is a project that we have called Trust My ICO. It's basically a service that represents trustworthiness around ICOs as well as investors. and it's going to be built on the Human Trust Protocol. And then the second is a more serious attempt to create a new kind of professional network built around communities, marketplaces, and messaging. And that'll also be a user of the Human Trust Protocol. We hope that a lot more services and communities use the Human Trust Protocol, that we're not just the only ones. Thanks.
Thanks. So one quick question. How does the token economics work for Hub, and how does the staking and I guess purchasing reputation, work within the Hub system?
So it is definitely a utility token, and the concept is that people can basically use these tokens to stake on projects and interactions that really matter to them. And then of course there are different degrees of projects, some really big projects, some often smaller projects, and the stake will actually vary depending on how how important it is for them to have success on those projects. Yeah.
Thank you. The next project we have is Theta.
Hello. This is Mithril. I'm the founder and CEO of Theta Labs. Theta is building a decentralized video streaming delivery network that's powered by a brand new blockchain and a new protocol. Let me give you a little bit of background about the company. Again, apologize for the text being so small. Well, actually, it doesn't look too bad here. A little bit about my background. So, undergrad from MIT Computer Science, did research at the MIT Media Lab group called Interact Cinema, working on nonlinear movies and human-computer interactions. Came out here from my MBA at Stanford. Started a company about 10 years ago called Tapjoy, which is a leader today in mobile advertising space. We pioneered video ads in mobile games where you watch this video for 10 seconds and you get some free coins. We built that company to about $100 million. After that, got involved with some more mobile gaming companies. In late 2005, my co-founder, Jay Long, who's sitting in the back over there, hey Jay, started Sliver TV. So Sliver TV is a parent company to Theta Labs, and I'll get to Theta and our networks. Sliver TV raised about $17 million in venture financing by the typical Silicon Valley VCs, CR Ventures, DCM, et cetera, as well as a number of media investors, including Creative Artists Agency, Samsung, Sony, et cetera. So when we raised our Series A early in 2017, led by Danhua Capital, who's a sponsor of this great conference, they looked at our operating expenses, and we spent somewhere between 30 to 40% of our money on CDNs and delivering our video. So Sliver is in the esports space, so we deliver esports video streams to users worldwide, about 3.5 million users in December. And so they asked us a very simple question. CDNs have been around for, 15, 20 years, highly centralized, the Akamai's of the world, right? The Amazon CloudFront. And these are data centers with big servers. Is there a way to solve that problem using a decentralized blockchain technology? So if you look at this space, it's video as a form of content accounts for 2/3 of the internet traffic, and that's only increasing, particularly driven by higher resolutions, VR 360 streams, and certainly 1080 HD quality streams and 4K streams, which is becoming quite popular. The CDNs today, as I mentioned earlier, highly centralized, extremely costly. If you look at a YouTube or Twitch, they probably spend hundreds of millions of dollars a year in trying to deliver the video stream to people around the world. And yet, if you're a user in Brazil, and in our case with Sliver, about 1 million of our users are located in places like Russia and Poland and developing countries. And if you're the first one to hit the video stream, it still takes about 10 seconds before the stream loads. It's a huge problem. So what Theta is essentially working on is we are essentially building the first network which is built on a new protocol, new blockchain, where the caching miners, the relay nodes, if you will, the nodes that rebroadcast the video stream, are able to earn Theta tokens while they do functional mining, essentially. It's essentially a mesh network, and there's a built-in incentive where users who may have PCs or any other device, they're watching, let's say, esports stream or YouTube type of content or whatnot. They go to sleep at night. They leave their computer on. It makes use of their unutilized resources and bandwidth to cache and relay the stream to others around them in their local network, and they earn Theta tokens from that. So it's a very powerful incentive for them to share their resources. Our strategy, again, is we're open source protocol and infrastructure. Various dApps, vertical applications that will be built on top of that. Sliver will be the first ones in the esports space. We'd love to partner with Twitch, with YouTube type of content, music, videos, TVs, movies. Distance learning is an interesting category for us. Peer-to-peer streaming, which is becoming obviously very popular in China as well as out here in the Western world. A number of different partnerships that we're looking to do. Incidentally, Theta as a ERC20 token, we launched that and it's now live on Sliver. It's been used by a couple million users back in December. I'm not going to go into too much detail here. I'll just summarize. We raised about 20 million on a private token sale, which ended about 3 weeks ago, and we are now live and traded on a number of exchanges, which I'll show you in the next slide. I'm just getting ahead of myself. These are some of our private token purchasers, a number of our partners located in China, certainly. Nirvana Capital, ELF Foundation. These are great supporters of us. We have both Steve and Justin, the founders of YouTube and Twitch, as advisors. I've known them for a long time. We kind of part of this little private group here in Silicon Valley, so they've been great supporters. And find us on any of these exchanges. There'll be more coming. Theta, Theta.
Thanks, Mitch. That Theta sounds like a great way to utilize sort of bandwidth that is not being used. So I do have a question. There's a few components to sharing video content, like including storage, verification, and a few other steps. And how does Theta plan to address that? Like, will that be taken care of by the protocol, like built from scratch, or thinking about working with other protocols that take care of storage? Or how is your team thinking about that?
So Theta is an infrastructure protocol and blockchain that's purpose-built for video delivery specifically. So our goal is to replace and to disrupt the entire CDN, decentralized CDN market, going after the multi-billion dollars Akamai's, Google's, and Amazon CloudFronts. We're first focusing on live video streaming, which has a different set of requirements and categories than VOD, video on demand, right? So video on demand, premium content like HBO, Netflix, there's all sorts of digital rights management and content issues, which is a much more complicated domain space. The free, ad-supported sort of YouTube type of content and the Twitch type of content, which is ad-supported, is where we're starting, so.
Cool. Thank you. Okay, yeah. And our final project for this panel is Origin.
Since the creation of the internet, digital marketplaces have been bringing together buyers and sellers in ways that were never before possible. It started in 1995 with the launch of Craigslist and eBay. And since then, we've had dozens of other types of marketplaces that have been created in what we now call the sharing economy. And the question I want to ask you today is this: what if we could replace every one of these businesses, these multi-million and multi-billion-dollar businesses, with open source protocols? What if we could replace these corporate rulers with a set of rules? My name is Josh Fraser. I'm one of the founders of Origin Protocol. We're dubbing ourselves the sharing economy without intermediaries. And there's 3 reasons that I want to talk about today on why decentralized marketplaces are the way of the future. And there's 3 big reasons. First is lowering fees. When we get rid of the middlemen, we get rid of the fees that go along with it. Companies like Airbnb and Uber take 20, 30, sometimes 40% out of every transaction. In the beginning, it made a lot of sense because it takes a lot of money to create a company like Uber or Airbnb. But what we've seen is as these companies have gotten bigger over time, instead of decreasing their fees, they've actually started increasing their fees and taking a larger and larger cut. The second reason we want to move this to the blockchain is to reduce censorship and government interference and overzealous regulation. So just this past week in San Francisco, 4,000 listings disappeared from the Airbnb platform because San Francisco government went to Airbnb and said, we're going to start fining you $1,000 a day for every unregistered listing on your platform. And boom, just like that, 4,000 listings disappeared. Now, we can't change the local laws, but we can remove that single point of failure. And we can give the opportunity to maximize freedom for buyers and sellers to transact with whoever they want. And it's not just the government that we need to worry about. Sometimes these companies themselves like to pick and choose favorites and decide who is and isn't welcome on their platform. We've seen examples where Uber and Lyft have banned people from ever using their service based solely on a tweet that they sent that they didn't like. And lastly, we think it's really incredible opportunity for us to redistribute the value back to the early participants in the network, the people who create the value in the network to begin with. I had a ride the other day with a guy. He was the 30th driver on Uber. And he's still driving for Uber today, and he's complaining that he's making less money today than when he first started. Now, why should it be that way? Why should it be the people without whom these companies would not exist, whether it's the first 100 drivers on Uber, first 100 hosts on Airbnb, why do they not get to participate in the upside? And if we think about how we go up against these multi-million, multi-billion-dollar companies, how are we going to incentivize people to be a part of it? Because let's face it, in the early days when we have these blockchain versions of these companies, it may be a bit of an inferior experience. But by giving these new token economics, give us an incentive and give people, the early participants, a chance to be rewarded for getting out there, being a part of a platform early on. So what is Origin? Today, we're building a protocol, we're building a platform, and most importantly, we're building a community. A community that believes in this crazy idea that we can create decentralized marketplaces without any intermediaries. Today, we have over a dozen partners that have committed to building on top of the Origin protocol. Some of these you probably know, like B-Token, who are doing home sharing. But we have, like I said, a dozen companies in all sorts of different verticals that are already today committed to building on top of this protocol that we're developing. Our platform is built on Ethereum and IPFS. It's 100% open source, and we have a growing community of developers. In our Slack channel today, we have over 800 developers who are all talking about how we're going to build it, and we accept pull requests from developers all over the world. A couple main things we're developing: Origin.js, which is a library which makes it really easy for anyone to create their own decentralized marketplace, as well as the Origin dApp. We have a demo dApp that's live on the Ethereum testnet today. I encourage all of you guys to go and check that out. See what it looks like to have a marketplace without any central servers whatsoever. And today, we're looking for developers, we're looking for people who believe in this vision, as well as strategic partners who are interested in building on this platform with us. Thank you.
Thank you, Josh. So the blockchain's a very natural platform for a decentralized marketplace or the sharing economy to move on to. And some of the examples you cited, Airbnb, Uber, they have very sort of specific target audiences. And I was wondering, for Origin, kind of as a very general decentralized marketplace, who do you see as your target audience for the platform?
Yeah, so I think there's a few places we can start. I think one of the interesting places would be stuff and marketplaces that are native to crypto. So we already see people trading Binance accounts on eBay. There's a secondary market for Binance accounts because they're not accepting signups. We see people trading allocation to hot ICOs. These are sorts of things that we see as very easy to come onto marketplace first. We also see an opportunity to go into markets where things like Airbnb are banned in a city, which means that now the decentralized version has a much better shot because the city has done away with the competition. And so we think there's a great opportunity there. Given the sort of the scaling challenges we've had with the Ethereum network as well, we also think that high transaction value items make a lot more sense than low transaction value items and low frequency. So things like home sharing on the blockchain is a lot easier to implement with something like Uber today. And one thing you need to remember as well is that we've got 2 billion people in the world that don't have banks and don't have banking, but they have Android phones. And so one of the greatest opportunities here is to bring cryptocurrency to the unbanked and bring them marketplaces that where there is no existing competition, where this is the first sort of chance that people have to come online to a digital marketplace. And we think there's huge opportunities in that market as well.
Great. Thank you. Thank you to all of you for sharing your projects. Very interesting. And I hope you guys have all had a chance to speak to or see at least some of the other just really fascinating projects at this conference. Thank you.